Alright, so I'm watching the market right now and trading a little bit. So I figured I might as well talk a little bit as I'm watching. With that said, I'm not gonna show trades. That's well, for now I'm not. Uh, I don't know. I may show trades at some point. However, right now that's not what I want to do. And so whoever's watching can take that for what it's worth. Uh, my whole goal with this channel is to simply give my thoughts and give you insight to how I think and the way I trade, and hopefully insight into the way Al Brooks teaches, if that makes sense. So really, I trade from based upon what I learned from Al Brooks. It's that simple. I studied purely what I learned from Al Brooks. By the way, that was a bad buy, and I'll explain in a minute. I'll explain why this was a bad, I'm sorry, that was a bad sell, as was this, and I'll explain that in just a few. I knew I wasn't going to have time to explain it before it probably happened. Anyways, so with all that said, you know, I like talking about trading. I like talking about really my thoughts on what's going on. And that's that. I love questions. Feel free to email me, comment below, go to Al's brookspriceaction.com website, send me a private message. My username is BCWOLFF. With that, let's get started. So let's look at all. I don't remember exactly what I said in the pre-market, but if I probably said I think it's going to be a trading range. We've been in a trading range for some time. I hope I was saying expect trading range price action. Anyways, to review the day, we were selling off. I had to guess, I said something to the tune that we were probably going to test that. Well, I didn't say that. Hang on one second. So, anyways, back to kind of what I was saying. I actually bought this close and scalped out at, I want to say 13.6. However, I probably should have held. And that's another thing Al talks about. To just be honest, I bought up here, bought again over here. Actually, I did the same thing. So I scalped out for 10 pips. I bought during this bar. So I bought, if I had to guess, probably, well, okay, I remember what I did. I bought as this bar was turned down quite a bit, betting that the first down would fail. And I ended up scalping out somewhere during this bar. And then again, I bought somewhere during down here, scalped out. So, I don't know. Would I have been better in hindsight? If I would have bought here, I think I got filled at, even if I got filled at 30, I got filled a little better than that. I would still have done better just by holding long up to here. But anyways, I like to scalp my trades. I like quick profit. But anyways, back to what I was saying. This morning, I don't remember what I was saying exactly. However, oh, I remember now. I said that this was a bad short because it's a bad risk reward. And looking more at it, it's really disappointed bulls. They'll try and get out of break even. If you're buying up here, yeah, I think your stop's way down here, at a minimum down here. And that's probably okay. I think traders will make money buying. But, yeah, I don't know. I'm happy with, I am missing out, but I took quite a bit of trades this evening, so I'm okay with it. We're also at the all-time high, at least on the, well, not really the all-time high, but on the daily chart, we're at the high. Anyways, so let's look at today. Well, as you can see, price went outside down. So decent stop in true short. Stop probably up here. Other traders use a wide stop and scale in. Bad. This is bad for the bears. This shows that a lot of bears were scalping. So you will have bulls beginning to buy. So they'll buy. and they'll start scalping. So they'll buy as the price goes down, scalp out. They'll buy lower, scalp out. This is all a trading range. Big leg one, leg two. This is a possible second leg trap, by the way, within a trading range. So do not be surprised if we test down pretty deep. I do think bears will make money selling up here, but I want to be careful selling. This is pretty strong breakout, and I don't know. I don't like to sell when price is this strong. It's also possibly parabolic. So parabolic wedge top, first push, second push, third push. So, I'm interested to see what will the follow through look like. I'm always looking, will the bulls make money? Will the bears make money? So possible two legs up, leg one, two-legged pullback, leg two. What else? This looked like a leg in a trading range down. It's three pushes, 1, 2, 3, or you can say 1, 2, 3. It's also three pushes up, 1, 2, 3, and then we channeled down. So really, today was lots and lots of trading range price action. You could literally just buy as it's going down, buy lower, scalp out, sell, scale in higher, scalp out, and that's really what I like about forex markets. Is I recommend pick one market. I like the dollar yen simply because I really like how it moves, and not to say that it moves any different, but I do think it moves a little bit more than the euro dollar. Than the euro dollar, and because of that, it makes the minimums a little easier to achieve. Now, it also makes the forex market more expensive. However, if leverage is an issue, you're risking too much compared to your account balance most of the time. So yeah, I talked about what I thought the market was doing long term. This is a stop entry, but it's within a tight trading range, so I would not be shocked if there's disappointment. But I certainly wouldn't sell above this bar. I think it's a second entry, so it's a reasonable buy. If I was doing anything right now, I'd be buying and scaling in lower, scalping out. Daily chart, trying to get a bull breakout. So far looking good, but I'm not convinced. Gaps are closing. Possible negative gap right here. Maybe from these lows takes us up to these highs. So I don't know. We're high up. This looks climactic. Tight channel. We're at a logical target. The test at the sell climax. So 15-minute chart. I don't know if that was a 15-minute chart. As I said, lots of limit orders. When you see this is a big enough surprise that really a lot of traders will buy and expect a second leg up. Here they got a much bigger surprise and much bigger second leg up than they expected. But the reality is traders are buying. And I should be long right now. But I don't want to, honestly, I don't want to deal with it while I'm talking and trying to make a video. So that's most of my thoughts. In terms of stop entries, here consecutive pushes down, 1, 2, 3. It's a reasonable buy. Always and bears probably get out. So where do always and bears get short? Well, I think it became always and short on this sell-off, so probably at least a second leg down here. Tight enough channel, probably a minor reversal. If the bears got out here, they probably have to get short again below here or here. And when you get this bear bar, you're clearly back to always in short, probably a second leg down. So probably sellers above. But it's a sign, this is telling bulls that it's probably okay to buy if they scale in lower and use a wide stop. And if they did that, they made money. You can see up here, even the bulls who bought this follow-through bar after this big report, if they bought and used a wide stop and scaled in, they made money. So how would they take that trade? Well, they buy the close, maybe put their stop somewhere down here. And the first reasonable buy was probably here. If they didn't do that, maybe they bought here. Typically, I would not do that. I would rather get out. Even if I got out here, I would rather get out and look to buy again. So always in bears get out, consecutive wedge bottoms, you're low in a trading range, probably going to test up, and strong enough breakout, probably always in long. This is similar to this bar. It's a surprise bar, so it's a pain trade. It's a bull breakout of a bear flag. This was a bear flag. Here's a bear flag, bull breakout, probably always in long, probably a few pushes up. Here, it's disappointing for the bulls, but still tight enough channel that will probably go a little bit higher, which we did. Bear breakout, but pretty much 50% pullback. Probably going to go higher again. Now we have 3 pushes up, 1, 2, 3, testing obvious resistance from earlier in the trading range. And now we have a decent second entry short. It's a second entry on a smaller time frame. First entry, second entry, reasonable short. Maybe stop up here. I prefer to stop somewhere up here and to scale in. Decent bear bars. Probably the first reverse slope will fail and we'll test lower, which we did. And we got a wedge down. And, really, today was a trading range. And when I say today, I'm just saying this chart. You had a lot of wedges. So 1, 2, 3, and then a nested wedge. 1, 2, or 1, 2, 3. It really doesn't matter. It's consecutive bottoms. First push, second push, bear breakout, 3 pushes. So you can call it a double bottom. 1, 2, and then a bear breakout followed by 3 pushes. 1, 2, 3. Whenever the market tries to bottom, you'll have buyers. And a lot of buyers they'll start buying in here, buying these lows, and they will see this breakout and say, darn. But they look to the left and they say, well, it's still in a trading range. I'll just buy more on a stop entry and manage the trade like any trader would who is using a wide stop and scaling in. So they wouldn't buy here, probably second leg down. They might buy here. Better to buy here. This is really just a doji. And it's really not, this is probably strong enough for a little more down. But either way, they buy up in here, they buy here, scalp out here. So in terms of the E-mini, I like to review that. I didn't trade it, but what would I have done? Well, probably strong enough bear bar, probably going at least a little bit lower. So okay to sell, probably always in short. But this bar is warning you of a trading range. If you're selling, you need to understand this is the leg in a trading range, and don't be surprised when you see this bar. This bar tells everybody trading that it's a trading range. This will be probably cause some sort of low one short that's going to fail, and we'll test up. So, and that's what happened. In a trading range, you get bad stop entries because traders are buying below bars and scaling in lower and making money. They buy this close, scale in, make money. Buy this close, scale or scalp out. Well, they buy this low, scale in, make money. And then what happened? Well, started channeling up pretty weak. Moving average gap bar, second moving average gap bar, but following mini bull bars, probably the first reversal down will fail. And here we got this. So, were we always in long during this bar or this bar or this bar? Probably. I would conclude that we're probably always in long here. And probably a second leg up. And maybe the bulls get out here, but if they do, they got to buy again here. It's a second entry buy, and what probably is some sort of minor reversal. So bulls probably get long again, but then when they see this, it's kind of a wedge. It's consecutive tops. So 1, 2, 3, bull breakout, and then 1, 2, 3. It's really not that clear, but what you need to understand is the market's trying to top. The market's trying to top again. The market's trying to top. So I would really just call that a wedge. 1 push, 2 pushes, 3 pushes. And where the second push formed a nested wedge. 1, 2, 3. It doesn't matter. When you look at this, what do you see? I want to keep tabs of. Okay. I probably won't take any more trades. It's 9 p.m. here. And I'm kind of winding down for the evening. And generally, I like to wake up pretty early. I'm a pretty early person as it is, so I enjoy waking up early. And one of the great things about trading Forex markets is you can trade them at midnight, or if you live in the Central Time, you can trade at 5 in the morning if you want. So anyways, but back to what I'm saying. When you see this, it's probably a leg in a trading range. Why? Because look to the left. For the bulls to make a strong trend, they've got to break strongly above this high. And, you know, the bulls never really clearly made it always in long. You know, sure, it's probably always in long that we're going to get a few legs up, which we did, but they never really, you know, where's this? Or better yet, where's this? The bulls aren't getting this. They have not had two consecutive bull. Well, they've had, this is the best they've done consecutive bar wise. It's just not enough. So it's a leg in a trading range. The best the bears, that's the best the bulls will get. This is also a pretty strong move down. So you always have to consider, just like I said in the dollar yen, you've always have to consider this. And although we did not get that, you know, maybe we got that, or that's not really that great. You know, so it looks like we didn't exactly get a measurement of leg one, leg two, and we got a little bit low it. But either way, it's the second leg down. First leg, minor reversal, and when you see this, it's trend resumption. The only thing you can do is sell, stop up here, and bet that you're at least going to get a measure move down. And traders that did that were rewarded. They sold it, you know, 15.5. They took profits, and they easily made 6 points. So that's that. Crude oil, I like to watch crude oil. Made a great day here. This is basically, I kind of see these as report bars. I don't care if it was a report or I don't care what it was. But when I see that bar and then I see bad follow through, you have to remember and think this could be some sort of trap. And then you see this bear bar, and then you see this tail, and then you see 3 bars down, many bars down. At some point, when you see this, I think it's game over. And then you see this, it's done deal. The bulls are failing, and we're going to get a measure move down or something, which we did. So you have to be thinking in that terms. When you see this, it's always in short, and you're going down for some measured move. And when I see this, I'm always thinking that when I see this, I'm thinking the bulls. When I see this, I'm thinking, okay, the bulls are going to try and form some sort of double bottom. And then when I see that, I say, okay, they failed. So what are the outcomes? Well, we're probably going to get some sort of measured move down. You know, maybe from that, maybe from that, maybe from that. Probably from the bodies. So the close of this to the open of that, probably projecting down. And you can see we did that. And very often when you have something obvious, it's kind of like a 4-point swings in the E-mini or any swing trade. Price will come close to that target that's obvious, and then you have to pull back, and then it finally reaches it. So, and for the heck of it, since gold's right here, so lots of trading range price action. You know, we went up, we went down, we went down again, we went up, and really sideways. Broke out to the downside on some report, but as you can see, terrible close, and you can do really either. If you think about it, buying is not really the greatest because your stop's extremely far away, and you probably will not get a 1-to-1 risk reward. So it makes sense to sell, but even if you sell, somewhere it makes sense to buy. So traders can buy, scale in, make money. They can sell and scalp out. They can sell this low, sell more, scalp out. Trading range. If I was doing anything, what would I be doing? I'd be buying. I'd be buying down here, scaling and lower, scalping out. And, well, we'll look at Apple. This is a scalping market. So traders, they sell this close, they buy this close, sell this close. I mean, just back and forth. Here, is it always in long? Sure. Traders will buy. And then look, they buy again, then look, bad follow through. You got to be thinking 20 gap bar buy, tight channel, maybe a minor, it may be a major reversal, but you may get a deep pullback, and then you get 3 bars down. Wedge bottom, we tried to go up, failed, tried to go up, failed, tried to go up, failed. So the bulls are not willing to buy up here. And went back into a trading range. Last market I'll look at real fast is the euro dollar. I'm not going to go that in depth on it because Al talks about it all the time. However, during the day, anything I'd be buying, clearly always in long, stop down here. So you buy that close, stop down here. Not a minor reversal. We go higher, no reason to get out, no reason to get out, no reason to get out. Really no reason to get out all day. So if you're fortunate enough to buy and hold, you would have made an incredible amount of money. You know, if I would have bought this at 1 in the morning, I wasn't awake, but even if I would have bought here and stopped down here and held the whole day, it would have been a lot less work. I only traded the dollar yen. That's really the only market I trade at this moment. But yeah, I had a good day, but I had to take a whole lot of scalps to make it a good day, as opposed to just buying a position, stop down here and holding. So, anyways, that's all I really got. I think it's always in long, and traders will buy a pullback for sure. Is it possible that we get a exhaustion and an endless pullback? Sure, but I think the best the bulls will get for at least 20 bars, best the bears will get for 20 bars is at least sideways. So for me, I'm not willing to buy up here. We're far away from the moving average. 3 pushes up, and we're at an extreme. So I would just rather, I'll miss this if we just keep going up. Uh, the market doesn't do this very often. It normally does this. So I'm always more prepared for this, which means I tend to make less on this. So anyways, hope this